The Nasdaq sees its worst day since December of 2022 as tech and semiconductor stocks sell off. The S&P 500 also corrects while the Dow outperforms with gains of over 0.5%. The Asian markets are trading largely lower and the GIFT Nifty is also suggesting a lower start for the Indian markets. Crude prices have surged. Brent is now above $85 a barrel as U.S. crude inventories fall. A weaker dollar also pushes prices higher. Gold rises to a record high on hopes of the Fed cutting rates in September. SEBI proposes creating a new asset class that will bridge the gap between mutual funds and portfolio management services, aims to offer regulated, high-risk investment products, proposes a minimum investment threshold of 10 lakh rupees to deter small retail investors. Asian Paints reports a weaker than expected first quarter. Margins have hit a multi-quarter low while tough demand conditions result in a drop in revenue. In key earnings to track, Infosys is likely to report industry-leading revenue growth in the first quarter. Also watch out for numbers from L&T Technology Services, Polycab and Havells. And India is the best long-term equity market in the world, says Chris Wood of Jefferies at the CNBC TV18 Market Town Hall. DDS adds foreigners are remarkably underinvested in India. He also believes that a Trump victory in the US presidential election will be a risk-on for Wall Street. It's the weekly options expiry. We are back after a midweek holiday and you're watching Power Breakfast here on CNBC TV18 in the Mumbai News Center. I'm Hormuz Fatakia. Let's first take a look at how the Asian markets are faring, and it's a negative start across the Asia Pacific considering the session that we had on Wall Street. The Taiwanese index is down almost 2% now, 1.7% lower as we speak. The Hang Seng is a bit of an outlier, trading flat but with a positive bias, but the losses are predominantly coming from Japan because the Japanese indices are down over 2%. The Nikkei is down 2%. The Kospi, the Topix, the broader market index is down over 1%. The Kospi in South Korea is also down over 1%. So red across the screen in the Asia Pacific, barring the Hang Seng. So it's not a good looking screen there in Asia. Pull up the GIFT Nifty as well, and that might give you an indication of how our own markets are likely to open. The implied open is suggesting a slightly positive start, a 22-point uptick as we speak, but will be interesting to see if these gains sustain. We'll talk more about this as the show goes by. So a negative start in Asia and the implied open suggesting a flat start for our own markets. But over to Wall Street then, and Wednesday's trading session was mixed. The Dow touched new highs. It closed more than 250 points higher, closing above the mark of 41,000 for the first time. But on the other hand, the S&P 500 slid 1.4% and the tech-heavy Nasdaq was the underperformer, slipping nearly 3%. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
Markets were mixed across the major indexes Wednesday, with the Dow hitting another record high, while the Nasdaq retreated as chip stocks fell on worries about more stringent rules on exports to China. The Dow was up 244 points, the S&P down 79, while the tech-heavy Nasdaq fell almost 3%, losing 512 points. Applications to refinance home loans jumped 15% last week to the highest levels since August of 2022, according to the Mortgage Bankers Association, after mortgage rates dropped to their lowest levels since March and more Americans look to refinance. Now, while last week's increase was big, refinancing demand remains more than 70% below what it was ahead of the pandemic in the spring of 2020. And Starbucks and Mercedes-Benz announcing a partnership today to install fast electric vehicle chargers at 100 Starbucks cafes along Interstate 5 in California. It's part of the automaker's $1 billion plan to build 2,000 new charging hubs around the world. Even though the chargers will be Mercedes-Benz branded, they'll be open to all EV drivers, even those who drive less expensive cars. That's what's happening here in the U.S. Back over to you in Mumbai.
And let's also now listen in to Eddie Ardeni, the president at Ardeni Research, as he gives his expectations on whether the Federal Reserve is likely to cut interest rates.
As a strategist, I think that if the Fed moves forward here on lowering interest rates, and it looks like it's locked itself into that pattern, it looks like they're pretty much committed to cutting rates in September. I mean, the markets will be totally blown away if they don't. because now the expectations of 100% that there's going to be a 25 basis point cut in September. So that's in there. And that certainly explains this melt up and now this broadening that we're seeing in the market.
100% expectations of the Fed cutting rates in September. So over to the Federal Reserve and Jerome Powell. But that's all we have on the global market action. How will these overnight cues impact our own markets? We have our research team joining in with the trade setup and the stocks that are likely to be in the news and the FNO setup as well. Now, we've been coming off 3 days of gains. We'll resume trade after the holiday that we had yesterday. The Nifty has been moving higher for 3 straight days, but the range for the Nifty has been narrowing. And in Tuesday's session, the Nifty just traded in an 80-point band. But the good bit is that on the charts, at least, the Nifty has been making higher highs and higher lows on the charts. So the graphic that will come up on your screen will show that, as Tuesday's high was higher than Monday's high. And if you can pull that up, because yesterday's high was the Tuesday high was 24,661, the new record high that we made in Tuesday's trading session. And Tuesday's low also, there you can see 24,661 is the new high that the Nifty made, and 24,635 was the high that it made on Tuesday, and so on. But the index that has been struggling though is the Nifty Bank, and that continues to face resistance at that mark of 52,500. And there you can see it's been making lower highs on the charts. 52,794 is what it was on the 12th. Then it went down to 52,600, then another 52,600, but the closing has all been below that mark of 52,500. So that remains the key level to track on the Nifty Bank. Of course, there were outperforming sectors on Friday, even though the benchmark indices were pretty sluggish. The Realty Index did well for itself. IT and FMCG contributed as well. So it will be interesting to see if there is any follow-on move today, considering Infosys reports results after market hours today. So we'll keep an eye out on that. Some important cues to watch out for, of course, today being Thursday. It's the weekly expiry today. And as has been the case throughout this week and the last week as well, action is likely to remain pretty stock specific, and earnings reactions will continue as well. So Asian Paints, LTI, Mindtree, Hathway will react to results. The big result of the day, of course, is Infosys, and L&T Tech, JSW Infra, Polycab, Havells, all of them. The US markets, as we just mentioned, was a mixed picture there, and the implied open also suggesting a mixed start to our own markets. So we'll keep an eye out on the trade in today's session there, the weekly options expiry. But over to Abhishek now, who would list out the stocks that you need to watch out for in today's session. Abhishek, good morning. What's on your list?
Good morning, Omar. So to begin with, Asian Paints, that has seen their Q1 results being below our estimates or our poll. So revenue was at 8,970 crore. We were working with a number of 9,175 crore. Our margins came in at 18.9%. We were working with a number of 21.1%. Net profit was at 1,187 crore. We were working with a number of 1,401 crore. Now, L&T Finance, on the other hand, is a record-breaking quarter. So 9-year high with respect to net interest margin, which has come in at 9.3%. That has led to a 9-year high, ROA or return on asset being at 2.7%, and the ROE is at 18-quarter high as well of 11.5%. LTI Mindtree, the revenue is higher than our poll in terms of dollar revenue. Overall revenue also increased to 9,142.6 crore. We were working with the number of 9,074 crores. However, the profits are coming below our poll, 1,134 crore. We are working with a number of 1,145 crore. Now, Kotel Patel Developers, they have given their Q1 business update. Collections are up 3% quarter-on-quarter and 19% YOY. However, the sales value is down 4% quarter-on-quarter and up 1% YOY. Aditya Birla Money, the NI is up 47.7% YOY, and profits are up more than 74% on a YOY basis. Just Dial, the revenue is up 13.6% YOY. Margins have almost doubled to 28.7% versus 14.8% in the same quarter last year, and net profits are up 69% on a YOY basis. Adani Green, there is a business update. Their operational capacity is up 31% YOY, and GMR Airport business update, June passenger traffic is up 8% YOY. Back to you.
Plenty of stocks as always, Abhishek. Thanks a lot for that update. And lastly, Sudarshan joins in with cues from the FNO space. Sudarshan, good morning. The weekly expiry today, what's the setup looking like?
Morning, Homa. So if you look at Tuesday's move, like we are in a phase of a consolidation, but good part is that we are seeing higher lows and higher highs, as you have mentioned. But the intraday move has been in a range. Now, it was reflected in the institutional activities too. FIs bought shares of nearly rupees 1300 crore, while DIs have sold shares of more than rupees 500 crore. And in the index future, FI's sale figure was more than rupees 50 crore. And that led to FIs reducing long exposure by 4,500 contracts and shorts by more than 4,000 contracts. But overall thesis remains on the long side. FI's long exposure remains for 80%. It's currently at almost at 81% with total net contracts of almost 3.50 lakhs. On the options front, we saw major activities in 24,700 call where premium was 37, and on 24,650 call where premium was almost 59. And on the put side, most of the activities were seen in 24,600 and 24,650 strikes. So what are the options writers expecting in the term of premium, resistance or support levels? Resistance is seen somewhere around 24,700 and support level has moved higher to levels around 24,550. Lastly, stocks that can be in focus. There are 8 stocks in the ban. New entrants are Balrampur Chini, Piramal Enterprises and Vedanta. And stocks that have come out of ban are AB Fashion, India Cements and Indus Towers. So keep an eye on these stocks that might be in focus because of them coming out of the ban.
Vedanta entering the F&O ban. Interesting update there. Sudarshan, thanks a lot for that. And as we slip into a short break, India is the best long-term equity market in the world. And that is the word coming in from Chris Wood of Jefferies as he visited the CNBC TV18 studios for a town hall on the markets with some of the biggest market stalwarts in the audience, including Ramesh Damani, Utpal Sheth and Ravi Dharamshi. In an hour-long session, Chris Wood gave his take on the performance, valuation and the outlook for the Indian markets going forward. Listening to what he had to say.
India is the only stock market I'm aware of right now where the small mid-cap sector is doing way better than big caps. Absolutely unique. And it's driven by this domestic phenomenon. This is not replicated in any other market right now. India is the best long-term equity market in the world. Clearly, the US has done fantastically well. But in the emerging market Asian context, India to me remains the great domestic demand story. You have this very emerging equity culture. But what, as you rightly have just highlighted, is amazing is the dynamism of the local asset management industry and the growing retail participation. And actually everybody, I've been in Mumbai 2 days, everybody from the financial industry, I think, is staggered by the resilience of the market following the surprise election result. My understanding, obviously, the excess valuations in India, or the perceived excess valuations of the small mid-cap area, but my understanding in recent quarters, they've had the best earnings growth too. So it's not completely divorced from underlying fundamentals. No, the only issue, the risk in India is simply that some of these stocks are very high valuations, so there's a risk of earnings growth disappointments. The big point for your viewers to understand is the foreigners are remarkably underinvested in India. So we believe that the global emerging market funds, who are the prime investors in Indian equities, are barely neutral in India, partly because the neutral weighting of India has gone up because it's outperformed, and partly because they haven't really been able to get into the market because the local money has kept it at valuations where they're not comfortable with.
Back with us here on Power Breakfast. Now, market regulator SEBI has proposed creating a new asset class that will bridge the gap between mutual funds and portfolio management services. Now, it aims to offer regulated high-risk investment products. Yash Jain is here with more details. Yash, what is SEBI proposing here?
The market regulator SEBI has put out a consultation paper which talks about introduction of a new asset class, and this new asset class is expected to lie or sit between your traditional or regular mutual funds and your portfolio management services. Now, market regulator SEBI has also laid down criteria which will have to be followed by mutual funds and AMCs which plan to launch this new product when it comes to what should be the various determination points on their launch. This new product will feature greater flexibility, higher risk-taking capability, and higher ticket size. Now, the current products that we have, as I said, your traditional mutual funds, your PMS, which is portfolio management services, and alternate investment funds, target various different risk-taking capabilities from retail investors to high net worth investors to institutional investors. All of them have different ticket size in that, ascending order with your traditional mutual funds to PMS to AIFs. And this new asset class will lie between your retail investors and your high net worth individuals, which means between your traditional mutual funds and the portfolio management services. Now, SEBI has, given two examples also on the kind of products which can be launched under this new asset class. Something that they've spoken about is long and short equity fund, inverse ETF fund. These are the kind of products which will be introduced under this new asset class. Now, which mutual funds or asset management companies can launch these new asset class or these new products? First one is route number 1, under which mutual fund should be in operation for a minimum of 3 years and should have an average AUM of more than 10,000 crore for the preceding 3 years. Those would be eligible to launch these new asset class. If any mutual fund, a newly registered mutual fund or even an existing mutual fund does not satisfy route 1, then they will have to appoint a CIO for this new asset class who has an experience of fund management for at least 10 years and managing AUM of more than 5,000 crore, and an additional fund manager for the new asset class who has an experience of at least 7 years and managing AUM of more than 3,000 crore. Those mutual funds or AMCs will also be eligible to launch this particular new asset class. Stakeholders finally are expected to submit their comments on this consultation paper by August 6th.
Yash, thanks a lot for that update. Now, with less than a week to go for the Union Budget, India Inc. is hoping that the government will continue to expand capital expenditure while adhering to fiscal consolidation roadmap. Now, FICCI is calling for capex to be hiked by 25% and a status quo on corporate tax. The industry body is also batting for revamping the goods and services tax, and it is calling for a 3-slab structure and changes to ensure smoother operations of that input tax credit regime.
We are hoping for a continuation of the development-focused agenda. We've been very fortunate that over the last 2 to 3 years, we've seen a very strong development-focused agenda. CapEx growth from the government has been significantly increased. It was up 37% last year.
We hope that they will continue to do the capital investments that they have been doing. We hope to see an increase in capex plans because of the multiplier effect that comes in, employment generation that happens, as well as impact on manufacturing because of improvement in logistics, etc., that come in. So I think that is one big expectation as a result of the investment that is there. Second is, I think that employment generation will be a top priority for the government.
FICCI's hopes there from the Union Budget. But time for a short break. Up next, we get you cues from the commodity space. Stay tuned. Back on the other side. Welcome back, and bringing you some national updates now. The Karnataka government has decided to put the controversial bill on jobs reservations in the private sector on hold following a massive backlash from various industries. Karnataka Chief Minister Siddaramaiah said that the bill will be revisited and the future course of action will be decided in the coming days. Now, this comes after the state cabinet on Monday had cleared the Karnataka State Employment of Local Candidates in the Industries, Factories and Other Establishments Bill of 2024, which makes it compulsory for private firms to reserve jobs for Kannadigas. And Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Thank you for that, Hormuz. Well, it's an all-time high for the gold price. It's trading above $24.70 an ounce. Of course, there's been a bit of a pullback after that very strong rally in the markets yesterday. But there is a lot of euphoria and optimism with the U.S. Fed rate cut expectation for the month of September. There also are feelers that the European and the Asian banks will cut interest rates also in this current quarter itself. If you look at the gold prices, we are up 17% in this year until now, outperforming various other asset classes as well. Silver prices also have seen some strong gains, but here as well, it is about a supply deficit for a fifth straight year in this current year that continues to be supportive. What is not working in favor of many other metals is the fact that the China third plenum meeting seems to be almost ending without any major announcement. The markets did expect that there could be something about property and homes because those are the kind of numbers that China has seen on the weaker side. That is the reason that copper is trading at a 2-week lows. The global inventories for copper has been rising. If you look at the rebar steel prices, they are near 7-year lows right now. So with China plenum meeting making no announcements, it has weighed on metals, also on the crude oil prices. So the industrial commodities definitely do not like this.
Not good going for metals, but gold is at an all-time high. Manisha, thanks a lot for that update. And with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward.